Everyone, welcome back to the channel. Topic for today is due to mortgage rate drops, and that has happened over the last week or so, that has triggered refis, so refinancing of mortgages. However, it has not triggered purchases to increase. So this is a really, really interesting point. It's something we've kind of been discussing on the channel before, but basically people have turned around and they've said, look, because the mortgage rates have dropped, I'm going to refinance my mortgage. So if I'm paying X and I was paying that for 30 years, now I've seen that drop in the actual rate I'll be paying. I'm going to go to the bank and I'm going to say, look, I need to refinance my mortgage and this is the rate that I'm going to pay. Now, I think that's interesting. Firstly, because I wouldn't have expected that to be the case. It's only dropped 20 basis points, so not a huge amount, and it has fallen to 7.17%. Now, as we've discussed, previous years, like after the pandemic, they really dropped interest rates in 2020, 2021, and they were, you could get a refinancing loan at about 3%. So it's twice or a bit more than what you would have been paying now. But the other thing to factor into that, I think, is that people may not have refinanced in those years. And so the person who bought a house, 28 years ago, who has got that mortgage at that rate, maybe thinking, you know what, this might be less than what I'm paying now. And I don't know if mortgage rates are going to drop that much more. And also in the US, you have the option to refinance pretty much at any stage. So if you've seen them drop and you're like, look, it might not drop again for a while, I'm going to refinance and lock in this rate. Then, if they continue to drop and it goes down to 5%, in 6 months, a year, you could also just turn around and say, I'm going to refinance and have that. So that's something that's happened, which I didn't realize would happen as much, but apparently there's been a 14% increase compared to the previous weeks, and a 10% increase from this time last year. So, even last year, I don't think we had interest rates this high because it's been a steady increase over the last 12 months. So people probably have realized that, this is the situation. We're not maybe going to see a large drop for the next year or so. Therefore, it is an increase from, last year at this same time period. So that's something that's very interesting. The other thing as well, I think, is obviously they could be taking money out of their property. So some people may be feeling the squeeze of current living costs, and therefore, they need more money. They're not able just to live off their current salary and the money that they're bringing in each month, which so they may have $1 million worth of equity in their property, but they say, look, I need $100,000 to pay for this. Therefore, I'm going to refinance and I'm going to increase my mortgage, or I'm going to put a mortgage actually on my property. Therefore, I can take that 100,000 and spend it elsewhere. So that could be another indication that actually the general economy is not doing too well, and therefore people are doing that, and pulling money and equity out of their properties. Now, the other side, which is interesting, is apparently there has been no increase in the potential people getting new mortgages. So that means that, people aren't saying, I'm going to buy right now and I'm going to take out a new mortgage on this property. Or equally, if they're going to sell their property, they're not trying to buy another home. So it seems like potential buyers are still on the sidelines and are anticipating perhaps a fall in home prices, which hasn't happened. I've discussed before, interest rates have risen, which means there is less demand. However, the supply has not increased. Again, due to these factors, people are not selling their homes. They're saying, you know what, I've got a good rate. I'm going to stay in my house. I'm going to do work on my house instead of selling and buying something else. So it has actually, the market has been experiencing historically low figures, and that means that prices have not gone down. They've stayed where they are. However, people may be thinking, you know what, prices could come down. The other side, I think, is as people have seen that interest rate drop, people have been predicting that, oh, wait, interest rates are going to come down. So if they've seen that happen this time of year, people aren't actively looking as much. We're in the holiday period. So they may be thinking that that trend is going to continue, and therefore they're waiting to buy something. However, I've spoken to a couple of my clients about this who are waiting, and I've said, what do you think the situation is going to be once those rates come down and people see that? probably everyone who has not bought for the last 9 months, 12 months is going to step back into the market. And we might have a similar situation to what we had in 2020 and 2021, where there are so many buyers looking for properties that they are multiple bids. And those people, it's kind of that build up that's happened. So I've said to them, look, if you're going to buy a house, to now is not a bad time. If you think those rates are going to come down, you can lock something in if you can afford it and then refinance as they come down, and not be in a situation where, there might be more supply, but the demand massively outstrips the supply, which is kind of, the same situation we're in. It's just maybe to a greater degree. So we obviously have seen that increase that's happened in interest rates. So hopefully those are coming down. It's come down by 20 basis points, which isn't a huge amount, but it is coming down instead of us staying the same or increase that we've been seeing for the last year over. And therefore, it may be that situation. So I think that's really interesting that there are refinances going on. My contacts and my friends in the mortgage broking industry will probably see that as quite a nice indicator that hopefully business is coming back, because we did not see refinancing happen of mortgages over the last 6 months, really. And so they were saying that actually the volume that they were doing was 20% of new mortgages and refinances that were going on previously. I do also think that as that time goes on, people will have to refinance because their mortgage is going to come to an end. And obviously, it's a 30-year situation. And maybe a lot of people refinanced when we had historically low interest rates in 2020 and 2021. But people do need to sell, people do need to refinance, and they need money to do things with, especially if we're seeing a downturn in the economy. So anyway, guys, I thought that was a really interesting point for today, just to have a quick discussion on. I'd love to get your guys' thoughts as always. If you could leave a comment below and let me know if you think I'm completely wrong, if you think there's a different angle to this, or if you have different thoughts to what I'm thinking. I would really like to know, or you agree. That would be great. But thank you so much for watching the video. I'm going to be back tomorrow with another one. I hope you guys are great wherever you are and have a fantastic rest of your day. Goodbye.